Right. So I'm Marc Goldberg. I'm a software guy by training. I have worked in the US and Europe for quite a while. I used to be a corporate VC. I then started my own VC firm, and I'm the founding partner of Maslow Capital Partner, which is a merchant bank. We just incorporated in May. We're trying to reinvent private equity and venture capital on the ground that we're very concerned that it is the elephant in the room, and that, as we heard in the previous panel, everybody hates VC. I mean, all the entrepreneur hates the VC, and then all the limited partners are really upset about us. So we're trying to change the model in an industry which is 40 years old and that has not innovate recently.
Okay, Dro.
Hi everybody, my name is Dro Berman. I'm a wannabe astronaut. I'm the founding partner of Innovation Endeavors, which combines a evergreen VC fund and a unique playground for us to actually start companies and building an international community of founders all around the world. The fund has been operational for the last 3 years. I started with Eric Schmidt, and we've been investing in over 50 companies, both in the US and Israel over the last 3 years.
Gilad.
Hi, good morning. My name is Gilad Novik. I'm the Chief Technology Officer at Horizons Ventures. Horizons Ventures is the private investment arm of Mr. Lee Ka-shing. We've been pretty active in Israel in the past 2 years with around 24, 25 investments.
Hi everyone, Ruby Suleiman. I run the high-tech practice at PwC. PwC is an accounting and advisory firm. We are involved in all aspects of Israeli high-tech, starting from entrepreneurs that build a company and up to an IPO and M&A and others.
Well, the last one should be the shortest one, right? So my name is Katia Gaika, and I work for Skolkovo Foundation. It's a Russian government initiative to build Silicon Valley-like place in Russia. And as of now, we've been in existence for 3 years, and we have about 1,000 projects that we support under our umbrella. About 200 of them got the funding, and we provide funding, we provide tax breaks, and different other advantages for the projects that are part of Skolkovo Foundation. And we are here also to bring some awareness of what Skolkovo is and to help our projects to commercialize their products.
Okay, very well. So it works?
Maybe this one is better.
The poem. It works.
It works? Give it back to us. Okay. So it's going to be easier. We'll overcome those technicalities. I want to introduce you one more speaker here, which is you guys. So unlike many panels, I don't want you to ask questions, but from time to time I will ask an opinion. And if someone have an opinion on what we are talking here and wants to express it, we'll give you the chance. So I was asked to talk here about funding models. Some people say the VC model, the good old VC model is dead. Some people are inventing new models. And I will try to see if my colleagues and me can get to a conclusion. What is the best model? Is there a best model? And what are the pros and cons of the different models that we see here? And I would like to start with a model which is relatively new, which is the crowdfunding. Crowdfunding have different types of crowdfunding. There are some clubs, there are crowdfunding in the public, but I would like to start with Kickstarter, which is in a way crowdfunding that helps startups. And on one hand, you can see it's a very nice model. You get money from the public. Most cases, you don't know who is this public. And if it works well, it's great. So I will start with Mark, because you said there are different models and different ways. What do you think are the pros and cons of the crowdfunding? But I want to focus on Kickstarter, which I'll go later to other types of crowdfunding.
So the VC industry has been disrupted from the low end, first with angel and super angel, and then with crowdfunding. I think as long as you don't give any political right and any legal right to your hundreds or thousands of investors, it is wonderful, because basically the key is maneuverability and the alignment between your investor and the management team through times. And alignment is really tricky, both for the low end and for the high end. So I think it's really interesting, and the question is, how high does it scale? I can crowdfund 100K, $1 million, 5 million. That's probably sort of the high end of it. But in terms of mechanism to bypass the VC and get money in a reasonably cheap way, I think it had demonstrated that it is working.
Well, Dror, what Mark is saying is very nice. We all know that when you have a high tide, you see from the head up. When you have a low tide, you see who were swimming naked. So when you're looking into this, obviously if everything is great, you get $5 million, you ship the product, it's great. What is the downside of crowdfunding?
I don't know if crowdfunding really disrupts the VC industry in the same way. Well, it's at least Kickstarter. I think AngelList is a great example for something that really disrupts the VC industry. I think Kickstarter specifically and similar models really allow for new types of startups that couldn't exist before in the VC ecosystem to come and rise. Things like Pebble, for example, that are much more complicated to put together. There's a lot of risk up front that VCs don't generally like to take. And if there is enough people that want to see something that come together and form, now there is a way to do that. It's more of a pre-sale way than actually raising money for OPEX and so forth, which is what the VC is generally doing. So I don't really see that as contradictory to the VC model.
I'm not saying contradictory to the VC, but there is a downside, delivery time, you need to service it and so forth. Do you think entrepreneur that goes to Kickstarter, they really see the downside or they ignore it?
I think the only downside I really see is that you take a huge commitment by taking somebody's money into a project that is not proven yet, right? And you're sort of making a commitment to sell a product that doesn't exist yet. There's a lot of risk in that. You may need to direct some of the resources now to building something that if you have raised money from a typical investor, may have taken longer time, and you've done it through a different timeline, as you suggest. So maybe the timeline and the way the company operates changes a little bit because you take this commitment up front. But again, it's hard for me to compare that with other models.
Joy, you're coming in from New York. There is a lot of kind of seed startups, media stuff in New York. Yeah. When you look at this kind of early stage startups, what will be better for them? To go to something like a Kickstarter, to go to an Angels Club? And I will talk about Accelerator later on, but what do you see kind of the pros and cons when you go into this kind of very early stage funding?
Sure. So I think that one thing that no one's mentioned so far is actually, we heard a lot of knocking on VCs this morning. I listened carefully to the startup panel, and I'm relatively new in the industry, and I went into it sort of with one foot because I was a little worried about it for these reasons. But what I see in the VC model, and whether the economics are broken is another question, but what I see in terms of actual benefit day-to-day to the startup is the value of the expertise of the individual sitting around the table. So, I mean, it's really depends on the specific VC. There are a number of us in New York, including my firm, who take a pretty proactive approach when we invest. Our model is to invest very, very early and to reserve capital for follow-on investments, which is also an advantage because the entrepreneur does not necessarily, and there are issues there with signaling, we all know that, but the entrepreneur does not have to spend a ton of time raising their next round, because we all know that the seed round usually is not the last round. So the benefits come with expertise, particularly if the investor has domain expertise, which I'm a very strong advocate of. I personally won't invest in a company that I don't know, that I couldn't run myself. I always feel that way. And the ability to come to the table with follow-on capital, I think is a tremendous advantage. That said, a Kickstarter company that has success in an early raise is kind of a celebrity. And everybody wants it. So it's great for the people where it works. It's fantastic for the people where it works. It really is, because they become celebrities, essentially.
Gilad, would you agree to the fact, kind of starting with a Kickstarter, as you guys investing in variety of stages of companies, Would you say this is a good way to start, or it's better off to go to the more institutionals or, super angels or VCs to start with?
I think it's a good way to start, because that way they actually got the exposure with the later stages investors. So it's a brilliant way actually to expose yourself to the rest. In regards to us, I think we are very focused to early stage more than later stages. There are some exceptions because we are a unique VC. We're not the ordinary one. We more kind of family fund. They invest in people and ideas. So that's our focus.
Katia, in most cases when people are investing, at the end of the day, if you will ask VCs, you will ask angels, then you get to a point, as Gilad said, people, it's all of what it is about. Now, when you do crowdfunding, the people are detached. You don't see who are the people. What do you think about this? Is this something which can be a time bomb down the road, or this is really good that you don't know where the money is coming from?
Well, the first thing that nobody mentioned yet, crowdfunding works well when it's B2C type of project, and when it's understandable, it's like been said, it's a pre-sale type of financing. But once a product is less consumer-oriented, it's harder to finance it with the crowd. And this is where I think the role of a government is important, because seed investment, as many of us know, it's a very risky one. And it so many times happened that it's not really helps startups if they early on, at the early stage, they overfinance, right? Because in the early stage, I believe, and our experience with financing, I think we financed about 300 million so far out of the 2 billion that have been provided for Skolkovo. We invested into this about 300 projects. And we realized that more than anything, they need expertise, they need an advice, and this is what comes with business angels. And in these cases, financing with advice is much more valuable than just a crowd money if it's a complex project, again, a complex product, B2B, or new technology. So this is what I think, again, we just discussed behind the scenes with John Bradford, who works with the European government, and he said that, yes, they do provide the funding for early stage companies, and this is the role of a government, to level the risk of the investors that come later on, and they get the companies without diluted capital. So that's an opinion that we have. Maybe it's a Russian thing. Maybe it works everywhere else.
Ubi, take us a little bit behind the scene of the crowdfunding. You guys are kind of the auditors for these companies, and what are the real kind of debates that when you are coming and working with a company, how to structure the deal, what it is, what are the debates that people see behind the scenes?
Well, specifically for crowdfunding, it's really a reality show. So if you come to think about it, crowdfunding is a developed IPO. So when you go to the public markets, you're really doing crowdfunding. Well, today it's much more advanced, it's much different, it's really something else. But when you're going to do crowdfunding, it's really going on a reality show. So I think that you would find the entrepreneurs debating among themselves whether they want that exposure, whether they're ready for that exposure, whether they think that they're sexy enough to get such an exposure. And I agree with everything that was said. When it is successful, it is a great thing to have. You're becoming a celebrity. You're becoming a VIP. Absolutely right. But when it's not successful, you're getting the same attention, but the other way around.
Go. Katia and Joy gave a lot of value to the person who sits behind the investors. Now, you gave a lot of value to kind of being able to raise from the crowd, to raise the money. Would you say the money is more important, or the value to support, or the value behind the investor is more important?
Yeah, I think there is a lot of changes in the industry that actually are very positive and are moving from a money management industry to value-driven industry. So you are seeing more of a traditional VCs going away. There is a lot of consolidation and things like crowdfunding, but again, more on the AngelList model where things become much more transparent, much more available to see what's really going on, enabling everybody really to invest in companies, and that really drives a lot of investors to differentiate, really think about adding value, and a lot of unbundling as well. So you see more of fat VCs that are being formed, really driving and building a lot of operational capacity in-house to add this kind of value that was never available before.
Yeah, go ahead.
I totally agree. I think AngelList is a very, very interesting development because in some ways it's the best of both worlds, because what we have been talking about where there's domain expertise and you can add actual, sort of industry value to the startup exists on AngelList for the most part. The folks who are now sort of the premier people bringing together funds on AngelList are very prominent angels who have various levels of industry expertise, and the fact that now the crowd essentially can gather around them and invest alongside them, but the entrepreneur still gets the benefit of an angel with a lot of expertise, I think is very, very interesting. And frankly, there are a couple of VCs who are using that model as well to leverage some of their capital. There's all sorts of issues. We don't get carry on it and all that stuff, right, to get into the nitty-gritty. But for the most part, you can leverage, we don't get management fees. We do get carry. You can leverage the capital that you have with crowdfunding, which is kind of, to me, it seems like the best of both worlds. And there are a couple of VCs in New York who are looking, including us, we're looking pretty closely at the model.
Yeah, and AngelList is really interesting because for me, the new syndicate feature that was opened several weeks ago is really the nail on the VC industry's coffin, and really a serious, very effective attempt at going after the 2%, 20% business model. Syndicate is the mechanism by which basically you can create an SPV, which is a specific fund with one company inside. You lead the round, you get people into your SPV via AngelList or other mechanism. And you are paid for the value that you create, not for the value that you have based on your position. And so I think syndicate is going to be a really interesting feature to observe. My belief is that it's going to go mainstream and it will disrupt the VC landscape.
Well, I want to comment on that, although I wanted to go to VCs later in our discussion. But I think if I'll go for that, and I want to go for you, Gilad, you guys were in ways which I think it's a very good example. At the end of the day, companies need a lot of money. Even internet companies need a lot of money. And would you agree that without institutional investors, okay, let's assume Waze was not acquired, could Waze would have survived without having VCs putting in a lot of money that could have brought it to a great success?
Probably not, and I think this is the value that strategic investors actually bring into the table. And it's more, money is one aspect of it, but the second part of it is the strategic relationships, the operational aspect. So I can give our example. At Horizon Ventures, we're part of a bigger group, the Hutchison Group. So we've got like 12 mobile operators around the world. Then our portfolio companies in the US, part of them are Facebook, Spotify, Second Market, Siri, and many others can actually bring value to companies like Waze and others and actually help them to get to the next phase.